I have never in my life seen anything like this. So hedge funds are placing massive short positions on the NASDAQ. What do? Bravo. I say you buy coffee and stop trading the charts like hedge funds. They always get it wrong. Coming in from betting markets, Kalshi Finance, just in nearly 75%. These are active fund managers, fail to even beat the S&P 500. And this is over the last 12 months. You would have to be a complete idiot not to make money in these markets. We will talk about today's trade that is currently happening, but we are still currently stuck in the same range. I did trade this morning, made a little bit of money down. Nah, that's it. Here is your range. You got this and you got that. Turn on one indicator, it'll actually give you the range. Break out of this, we go lower. You break out of that, you go higher until that. You can scalp it like my students. If you are confident, you can hold your position a little longer if it is an A setup. But like my student here, that wasn't an A setup, was it? It's a negative $3,000, but you made it back. And congratulations. This is what you guys send me. This is what he's up, $9,030. Just by being patient and waiting for confirmation. This is your no-no zone when it got up there. Come on, stop. You don't always have to be trading. Now, getting back to the fund managers and getting back to every hedge fund out there right now, they are completely and utterly all short. And I do not know why, because in the larger time frames, very important, it's the 200. If you are above it, you click the blue button. You are buy. If you are below it, you are short. You click the sell button. That is the very first button you click. And as you see here, look, you could play whack-a-mole off the 20, back down to the buy zone. You're under the 200. You are under the 20. It is momentum down. You can let it run up, smack, and then it's probably going to come down here. We're waiting. It's a waiting day. This actually is like an $800 move. That's it. All right. Thank you. Have a nice day. But here is what fund managers do. And this is crazy because I work with one and he has lots of money. I'm like, hey, don't with my funds. Let me reset this. Please trade futures. Basically the same button, tax different because I have big accounts with like other banks, retirement accounts. And I'm like, just buy, right? It was right here. I'm like, buy. And he's like, well, we buy the SPY. I'm like, please just, what? QQQ, SPY. I'm like, why an ETF? Get taxed differently. Why would you do that? And he had to look into it. And he's like, yep, can't buy that other one. Be this one right here. Look, see, same button. And just click a button. I don't care. SPY, NQ1. I'm like, NQ1. Oh, we can't do that. All right, great. But for you beginners and fund managers, I know you guys have taken my course. You're like, I can't do that with my clients. They can't do that. It's like they have one button. It's right up here. Typically, we buy. But as you know, back right here, that day, that was the day I said, go long. And now, yes, you have a high probability you are topping. Fund managers must have my indicators. Yes, but it's not an A setup. This was an A setup. You have Shamu, Pop, 200, 9, everything. Go long right here. But you're not about, okay, Bob, you're close enough. Went purple. We pulled down. It goes up. Now people are like, oh, it goes purple. Oh, you have whale. Oh, pink. You have momentum up. You're above the 200. You're above the 20. You're above the 9. And you really, yes. Yeah, look. It's 7, 8, 9. Purple. Let's short it for a little bit. It's momentum up, fund managers. And with everyone shorting this is what's going to happen when it goes up. Because they're like, it's going to go. It's going to go. Here we go. Everyone short. When it starts to go long, they're like, oh my gosh, we got to get out of our position. So what do they have to do? They have to sell it. They got to get out, buy it. They got to buy it at even, oh, it's higher. And that creates momentum up. They're like, buy it. We got to exit, buy. buy, and it just keeps going. So when everyone thinks, oh, we're going to go down, you have something and it will just wreck everyone, especially if 75% of fund managers, again, this is how you can beat every fund manager or fund managers you're listening to me that have taken my course. You call me for advice. Just turn on an indicator, okay? Just swing it. Do it maybe 2 times a year. I don't care. 3 times, 1 time. And then you will beat the S&P 500. So not only do you get to keep your job, the boss is going to be like, hey, how do you know this? Breaking news. It's as simple as this. I'll draw it in crayons for you. I also have an online course. Lots of videos. I actually have to add a video today. $2.99, the price of a textbook, which beats $3.99. You get to keep it forever, pass it down to kids. Maybe have your kids. Your kid's like, I can't make any money. Here. Click buttons on a screen. It's 2 buttons. Click buttons, print money. Or an easy step-by-step, 3-step model. Click buy, click sell, print money. For my advanced traders, click sell, click buy, print money. Wait, what? I will walk you through it. This is the 200-day moving average in crayon. If you are below it, now I know fund managers click buy, and then they click sell. Let me help you. This is the advanced version. If you are under the 200, you click the sell button first. If you are above the 200, you click the buy button first. Let me visually help you with this one. The 200, if you're above it, you come up here, you click buy. Have momentum up. That's why I knew to take millions of dollars and make it go up. I made roughly 12% on that trade, and then the next setup. And here, I'll make it simple for you. Do you see the pattern? Okay, you break out of that, you should go up there. But let me turn on my indicators. When it does that, okay, it goes off. When it does that, it goes lower. So, I mean, come on. Another 3 or 4%. Piggies get fed, hogs get slaughtered. Could be wrong. This could just rocket ship. That over there was an A setup. This is an A setup. You're above the 200. You have momentum up. Why are you shorting it? I mean, you can, but it's like a B minus. Maybe it's a B plus if you just scalp it, because you are far away from the 200. So it always comes back to the 200. Okay, class. So you have your crayons out. This is where fund managers click buy, and that's where they click sell, okay, or retail. Under the 200, this is where you click the sell button. Above the 200, you click the buy button. As you can see, where 75% of active fund managers can't even keep up with the S&P. You can't even match it, because I guess they need to take my my crayon class. What they do is they follow the news. Oh, and this just in, we have a live fund manager working right now. That's what he does. He says, okay, he could just buy SPY. There you go. There is your active fund manager. This is what you are currently paying him for. While everyone is piling into the top of AI, which fine, I don't even know. I don't know how you're trading this. Trade coffee. Look at one of the hottest trades right now. If you were just to follow the coffee chart, coffee has become one of the best trades in the market lately. Coffee futures up 13%, which is currently beating the semiconductor. And it just it's a futures button. Now, I have to be transparent with you. I have never traded coffee futures. You come here and you look at you got indices, energies, metals, grain. Currencies, that would be this one, grains, but there is no coffee. But you can trade corn or soybean or live cattle futures. So why follow coffee and just, okay, how's this one doing? Okay, you're under the 200. Hit the Bravo zone, popped right out of that. Ooh, lumber futures. This is actually going to be a great swing trade. But for those of you that read the headlines and you got to get your coffee futures, if you really want to trade this C move, you are in a triangle. You can click buy here. Again, it's a C move. You close under that, get the frack out. Yes, you're above the 200. You're above the 20. You're breaking out. Momentum up, not totally overextended. click that button. That is going to be a $300 move. We're going to want to put in a limit. This thing will barely move and you will see your digits go up and down very quickly. And if it goes down, you're okay. Be thankful that you're not one of the banks. Oh my gosh. You're not the Treasury Secretary. I don't know what he's going to do besides leave sticky notes on his desk. Everyone's trying to intervene in Japan. I've done videos on that. I need to do another video on that. That is going to be my today's video. But while you're watching this, oh yeah, you'll watch this first and then you'll watch my J Bravo second. Oh, and breaking news, while Japan is selling treasuries to buy yen, while everyone's now short fund managers and you're sitting there at your computer and you're like, I'm in the no-no zone. What can I trade? For $1 something a day, you guys, you get two, my bull market watch list and my options watch list. Which options? Gonna want to trade the options button. Locked in at $50 a month. That's it. So when you're taking advantage of some setups, you're taking advantage of other ones. I need to go into this. This is your black swan. This is your, oh my gosh, moment. This is your levels breaking out. This is 07. This is your trend is your friend until the end. But at the end of the day, just come over here. Either NQ1, that's a little bit bigger money, MNQ1, okay? Still, now you're in the no-no zone. Jeez. Come over there, click those, watch your digits go up every day. Make sure you have your stop loss and make a few extra bucks while the government is your enemy. Guys, they are printing. They're printing money. You need to print money. You're not going to be able to keep up. And I don't have a time machine to take you back to the 1970s. Or two people earning $3 an hour can buy a brand new house and pay off the car in a few months. Have kids and have low crime rate. And yes, so again, click buttons on a screen, print money while they are to keep up. And with that, I will see you in the next trade.